Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So, if that sounds like you are in the right place at the right time. So, welcome or welcome back to my channel, traders. Now, if you are looking for a specific thing, I do have a ton of playlists that you can review. You can get more information on indicators, strategies, and even market structure. So I highly encourage you to get nosy and check out what's there. I even have a playlist called Real Forex Wins and Losses where I review all of the trades that I take and I post for the students that I am currently mentoring. Now, I do have a personal mentorship program. It comes with a self-guided course that you can do online. We also meet every Sunday to have a live session, and I post trade ideas in the chat weekly so that you can earn while you're still learning. Now, in today's quick video, we're going to be looking at a NZDUSD breakdown, and this trade was taken on November 18th, 2024, around 6:05 p.m. So this is what I posted in the chat. It was a potential trade idea and it was for a swing. Now, in recent times, I have started to distinguish between my swing trades and my scalping ideas simply because people have different trading styles. But I want everybody to have the opportunity to make money at least once or twice throughout the week. So this was a trade idea. It was taken on the 1 hour time frame. It was for a sell at market execution or a pending order sell stop. I also did give them a potential stop loss or higher. I used a higher stop loss because it was the previous high. And then there were a few different zones that they could target for profit, all the way down to 58000, which would have been about 80 pips total from the pending sell stop entry. As always, I encourage everybody to do their own analysis, check the news, and use proper risk management. Now, if you ever do enter a trade at market execution, which means you're just getting in, make sure that you do adjust your stop loss and take profit to your actual entry and not just copy something from somewhere else because you may get stopped out of the trade if your entry wasn't correct. So we're going to go to trading view and I'm going to break down what I was looking at when I decided to take this trade, and then we're going to see what actually happened. So the first thing that you're going to want to do on any chart is you want to go over to your free tools. TradingView has a bunch of free tools and a lot of different trading apps actually do, where you can at least add trend lines to your chart. And you want to get a horizontal line, and you really just want to mark up levels that you see the market clearly bought or sold at. So I marked up this level because this was a clear area where we can see that it sold. Now, if you guys can see that, go ahead and drop a 7 in the chat. I also marked up this area because this was another clear area where it sold. I put a line here because I can see that the market bought in this area several times. And I know that by using these lines, I'm creating take profits and stop losses for myself based on what the market has already done. Now, one cool thing about trading is it's not really a lot of guesswork that goes into it. It's more of what do I see? What is the market giving me right now? And that'll help you to feel more confident to take your entry. Now, you'll notice I have one indicator on my chart, which is the stochastic, and it's pretty simple to read if you follow these simple instructions. If you want more information on the stochastic, you can watch any of my 5-minute quick videos on it, and I do have some more longer in-depth videos on it as well. There's also a ton of information on YouTube. You can do your research, but it's a pretty easy to use indicator. Now you'll notice two lines on the stochastic, and just like the market, you'll see that it can either be going up or down. Now, when you see that the stochastic is facing down, the orange line is on top of the blue line, and one or both of these lines has crossed above the top line. Has crossed below the top line, the middle line, or the bottom line. That's usually a reflection that the market is going to be selling as well. Now, on the other side, if you see that the stochastic is facing up, like we have here, you see that the blue line is above the orange line, and one or both of these lines has crossed above the bottom, middle, or top line, we can see that that is when the market buys. So again, I set up my areas of support and resistance, and we can see that the market was starting to resist at a previous zone that we marked up. Now, again, resistance is places in the market where the market tends to sell, right? This will be another area of resistance. If you guys can see that, drop a 7 in the chat. And an area of support is a place where the market tends to buy. All right, if you guys can see these areas of support and resistance, go ahead and drop a 7 in the chat. So I noticed my market was at a previous resistance. That was my first indication to get in for a sell. I also noticed that my stochastic was facing down and my orange line was on top of my blue line. Now for the stochastic, I do prefer to have all three confirmations. So because it hadn't crossed below my top line or my middle line or my bottom line, I decided to set a sell stop pending order. And a sell stop means the market is going to drop and then it's going to trigger your trade at a lower entry point than where the market is and hopefully continue to sell. Now I set my sell stop at a previous area of support, right? Because in a selling market, if the market breaks past support, most likely it's going to continue to sell. So we have one confirmation here. We had two confirmations on the stochastic. So let's just go ahead and hit play and see what actually happened. So we can see that the market was still resisting that area. We see that it actually came down and it hit our sell stop entry before it started to go back up. Now, I love how even though the market did initially sell, we can see how it actually is playing between this channel or these two relevant levels that we had previously marked up. Now, if you look where I have the top line, that is where my stop loss was because I was using a strong previous area of resistance. Now, while the trade was out of profit for a while, it didn't actually go as high as the stop loss, which is awesome. And as we can see, our trade trigger again. If you missed the first entry, you had an opportunity to enter there. The trade trigger, as we can see, sell stop trigger at 58800. And it didn't quite hit TP1 yet, but we can see that it is on its way there. Again, using those previous areas of support and resistance to either reject off of and come down or to be supported and go up. So it did take a while. I think it took about 2 or 3 days, not only for the trade to trigger, but also for it to hit TP1. But once TP1 was hit, we can see that the selling actually did continue. TP2 was hit. The market stayed within the new area, right? Anytime the market is between two lines, you want to use that top line as resistance and that bottom line as support, right? If it breaks past that resistance, you are going to want to potentially enter for a buy. And when it breaks past that support, you may want to enter the trade for a sell. So what we can see here is that after the market hit TP2, it decided to once again revisit or test previous highs to see if it really wanted to turn around. Like, was this a reversal or was this a retest? And we can see that it was a retest because it came back down and it hit our TP3. Now, all in all, this trade did take about a week to play out, but that's what swing trades do, right? If you want to get in and out of the market, you want to be a scalper. If you want to get in and out of the market within a day, you want to be a day trader. If you don't mind holding your trades for a few days, like this example, for a payout, then you will be considered a swing trader. And if you want to take it to another level and hold your trades for months, you would be a position trader. But it's really all up to you, your trading style, how much time you have, how much capital you have, and ultimately how you want to approach the market. So I really hope that this video was helpful. Not only was it a review in support and resistance for entry and exit points, it also was a review on the stochastic and patience as well. So if you learned something today, don't forget to hit the subscribe button if you're not already subscribed to the channel. Give this video a thumbs up, drop a 7 or a question in the comment box. And if you want to register for personal mentorship, that information is all down below in the description box. But I really appreciate you guys spending some time with me and putting the effort into your education today. But that's really all I have for you guys. Until next time, rich friends.
Yeah.